The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Good morning, everybody, and it's great to be here Monday through Friday, Tiger Technicians Hour on market days. And thank you to John and Steve for 3 great hours. What is today? Wednesday? Yep, Wednesday it is. So we got Larry Pesavento. Then we get just programming all day. Hey, this is a very important session. A couple of reasons why. If the Dow starts to break decisively, it's down 34 at 17,976. So if it breaks decisively and goes underneath 17,850s in the next day or two, a couple of things are going on. The S&P is at 2,091. The QQQs, let me just move over here and get those. The comp index is, in fact, down 26 at 4968. The QQQ series is at this particular point down 44 cents at 107.49. You've got gold up 390 at 11.95. Remember, I spoke about the consolidation in the dollar, which should help the commodities, but actually it's gold that's really participating quite well in silver. Silver is down 3 cents at 16.98. You've got platinum up 7 at 11.47. High-grade copper is stuck in that trading range. That's 2.80, still under 3. Crude oil is at 47.84. You've got bonds. Bonds are down 3.30 seconds. The TLT itself is down 38 cents. It's held really well. We'll go through all these in detail in a little while. We've got the dollar at this point down 27 cents at 97.17. Euro is up a little bit. Pound is up a little bit. And the VIX right at this moment is at 13.61. If I can just get that information down. Oops, no, it's up. No, it's 13.62. Isn't that interesting? That volatility index has been persistent in staying low. It's suggesting that the buyers are still there. Talking about buyers, all I wanted to say is before we go to our first caller is that the IWM has a pattern right now in the weekly chart. Let me expand that a little bit right there, which says that the 2109.75 in the futures, that is, which was almost tackled on Monday. The S&P E-mini, the June went to 2107.00. It was less than 3 points away from making a new all-time high. And what I'm looking at here is that there's a chance for a Chapman wave peak C1, peak C2 to occur if the market starts to tank. Now, we tried to rally yesterday. We're doing very nicely. Turned around. We've had 3 days now of little red candles. That's changed the sandwich pattern of green, red, green, red, green, red, with stronger moves to the downside on the way down. And ever since early March, we're going up with green, red, green, red, green, red, and now we've had 2 more reds. Well, the day hasn't closed. We've at least got 2 consecutive reds, and that's a change in pace. Let's go to our first caller. We've got Ben in Tallahassee, Florida. Ben, how are you? I love the name Tallahassee. How are you?
Very good. How are you, Basil?
I'm well, thank you.
Excellent. Yeah, I was looking for, because what keeps me optimistic here for a few more days is exactly what you said about the VIX. With the market, minus 50, minus 60, but the VIX still negative as well. I was thinking about maybe even looking at a IWM trade on the long side here just for a week or so. I was looking to see where you got on a daily chart.
So this is very interesting. The IWM, which is the Russell iShares 2000 ETF, is trading at 124.53. down $1.32. That's kind of deep. It's down 1.03%. The Dow is only down 0.30, and the S&P is barely down 0.10 at this particular stage. I tell you what I'm looking at here, and the reason why normally I would say absolutely. I don't see any reason why you don't at least consider it. The MACD has pulled back. It's lower than it was at the previous high back at 123.78 in early March, late February, early March. And the stochastic is holding very well at 91%. There's just one thing here that makes me a little bit cautious in terms of whether or not we're going to get the sharper sell-off now rather than squeak to a new all-time high in both the Dow and the S&P and then start the pullback. And because I am thinking more pullback that has the potential here, because remember, my thinking is, although absolutely nobody that I've heard has said it, the indications that I'm looking at through the transportation index, through a number of different areas, is really intimating to me that we're probably in about the third week or so of a mini recession. It's just, this is a real tough thing to do because I'm not an economist, and I'm just going based on my experience of these little mini recessions, going all the way back to the 1970s when we used to have these 6 week to 2 month consolidations and then start to move up again. And I'm looking at this and I'm saying, you know what? There is a chance that you'd have, if this is a peak B and not an alternate count, and everything here so far is saying peak B, but this is a little deeper. In other words, we've gone under the 9-period moving average in one session from looking really good yesterday at the close on the 24th, closing at 125.85. We're trading down more than a point lower, almost a point and a half lower. And there isn't a real reason.
Well,
I haven't heard.
If you put it on a 120 minute, you see there's a little gap that could have been filled on the 20th.
That brought me to the next thing that I was going to discuss, and you just beat me to it. That in a shorter time frame, we should have tentatively gone and then just squeaked into the gap, which is the gap at 11:30 in the morning, with a low of 125.31 made on the 20th, and then a high just the bar before from the 19th with a high of 124.96. So we've got almost a point, 125.95. We've got a 60-cent gap, and that went right through it this morning. So what I'm looking at here says to me, two things are happening that in terms of speed, you know what I always say? I say that in a buy mode, speed is your friend, and you don't want to have more than a day, maybe one to two, maybe even 3 days, but the third day needs to be already starting to head towards the previous left side high bar. That's on the way up. And on the way down, speed is your friend. You don't want to hang around just going sideways. You want to be going down. Stop for a brief respite and then down. That's the way it would work. And the candles that I'm looking at this particular point are suggesting that the rally that we had Monday and the attempt and then the pullback Monday, basically also for no real reason, it was the same kind of rug pull that we saw that I was discussing on Friday in the IBB. And look what's happened to the IBB. It's down almost 8 points today. It's down in the 348 level, and just it was over 20 points higher just 3 days ago. So I'm looking at this and I'm saying, if what we're seeing are the very quiet signs of a no news decline that suddenly starts to pick up when the news comes about, and that's where you will see. You see, if the volatility index, which is at 13.80 now, starting to rise a little bit, if it starts to climb and goes over 14.20 by the end of the day, then we have enough signs to say phantom peak in the weekly chart of the S&P. The Dow's already, as I've said, for a week already, the Dow's completed everything that we need to see in its daily and weekly charts to be able to have this pullback. We're just waiting for the parallel move in the S&P. Even the IWM has gone to a doji high with another little doji candle, what I call the silent doji candle yesterday, and it's in leg E up as I notated it here in the weekly chart, and we've just had a peak F in the 120-minute chart. So normally I would say to you, hey, I like your thinking. What I would do is I'd wait for a little bit of a bounce, and if the IWM can get to 124.63 to 75 late this afternoon or tomorrow morning by 11 o'clock, I would definitely nibble on the long side. I wouldn't get too carried away. You're trying to play, you're just playing a bounce. I don't feel like saying that right now because so many of the ducks that I'm looking at, look at the eye white, if you don't mind. I'm just going to bring in a couple of extraneous aspects. The eye white.
The only other question I had is, what would you call it for an alternative if it wasn't a B, peak B?
I spent so much time on this. Let me do it again. IWM daily. I don't know if I can call it, and going to a new all-time high to fail at a B would be so unusual, but it is really subsidiary to these other indices. It is a small cap, and as a result, it could in fact have a pretty sharp pullback, and that pullback could still keep the B active, but it could go all the way down to the 123 to 122 area as the market turns down, and then maybe have a rally and just go sideways. So I could give you an alternate count, which is an alternate count D. Let me explain what I'm talking about. The regular peak D that was made, you see it made an all-time high back on the 31st of December at a peak C, and I had no choice but to call that C minus. I should have called that. No, I couldn't call it anything else because it made 3 higher peaks after the previous peak E at 118.78. So there I was stuck, and I said to myself, I can't let this fool me. And fortunately, I looked at the other indices, and they were conforming. Then it pulls back very sharply, goes to 114.20 and starts a brand new move that goes peak ABC, and it goes to a D on the 6th of February, pulls back, and then it goes E/A right there on the 17th of February at 122.06. Next day is 122.05. And then it goes F/B, and then it goes G/C. So if I count that peak D at the 6th of February as the end of a move, and that the low bar on the 10th started a brand new move, I could say that this peak C of 123.78 on the 2nd of March has gone to a D and an E. And this is already B/E. I'm still giving B the preference right now. So, but that is convoluted. I don't like these convoluted. I like to make it simple. Ben, can you hold on one sec?
Sure.
Okay, we'll be back with Ben and Dan straight after this. Basil Chapman, Dow's down 75, S&P's down 4.5. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back with Ben in Tallahassee, Florida. Now it's down 75. And this is so, Ben. I had a quick look at some of the home builders. I want to see what's going on here. I didn't grab Disney because question in the den or statement in the den. Isn't Disney, Basil, can we look at Disney, good recession indicator? Yeah, see, Disney's pulling back just like the IWM, much sharper in this leg up from a peak C, all-time high, than it should. So this is a little bit weird what's going on, and all I can say is that...
The other thing I wanted to make note of, Basil, is that I think the SPX and the Dow are still in a daily peak C, right?
No. The Dow. Oh, wait a minute. Let me just double check. IND. There was a difference in. Whoops! What did I just do? Let me just do this again. The Dow is in. Yes, peak C, but it's underneath the previous high. There's a big difference. If it's under the major high, then all that we're looking at is a chance that you could have what I call a retracement rally failure mode. But that's different to an all-time high, which the IWM has made, which what was I just looking at a second ago? Disney has made. So there's a very big difference. So all I can say is the day is young, and there isn't really a negation of this buy mode in the IWM as of now. But if there's a break below the 123 support, 123.40 to 123, better be supported, because if there's a break from that level, it's saying something's going on here that's a little bit different, that the intensity of the selling is such that we're looking at possibly the daily leg and then peak aborting before getting to a D. Very, very unusual, but I have to say that when you're looking at the smorgasbord of so many different things, the tide really is much more important. And if the weekly tide of, say, the Dow and the IWM, and I believe even the NYA, which is at in the weekly chart, yeah, it's still at that peak F/B. If it fails to take out the high that was made on Monday, in most of these cases, by, I would say, Friday at noon, it's going to say something's going on here that you got to respect. That's all. So now let's answer your question. Your question was, is this a time to maybe play the upside that's left, which is not a bad thing, from 124.33 to the high that was made of 126.32. That's a very nice percentage gain, just on a shorter term.
So like a very small option play is what I was thinking.
If you did an option play, then the difference between the option price between now and 40 cents higher in the IWM would not be all that much if you're expecting to get 1.5 to 2 points on the upside. So I would say have a little patience. If you want, you can actually buy one call option right now and just treat it as your pilot light and see how it's reacting or acting. In other words, if there's any rally in the IWM from 124.33 to, say, 124.47 in the next 15 minutes or so, and then it holds and your premium starts to increase in the call that you wanted or you have bought, that's a good sign. Treat it as a premium expansion or contraction clue as to whether the IWM can really bounce. But I would say for a day, I'd be a little careful. By tomorrow, I'll have much clearer information. Hope that helps you.
Basil, thank you very much. Keep up the great work.
Thank you very much, Ben. Let's go to Dan in Baskin Ridge. Dan, how are you?
Doing well, Basil. Thank you.
I'm going to do this. I'm going to pick up the phone and I want to go star, 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 star. This is the latest thing. They call the number, any old number, all day and all night, and I want to find out who's home at any particular time. And I was told that if you go press the star button, it totally confuses the computer. So I just did that. All right, now we can go on. Dan, you're looking at what?
Yeah, at the flat volatility index that you're talking about, and I usually trade the TVIX.
Right.
And but Basil, two things. One, I don't know. We're coming into whatever bonus pools might get paid over the first quarter, and that's on the fundamental plus side because I know that I have two family members in insurance, and this paycheck is when they get their annual bonuses. Secondly, I'm looking at negative news. When is this going to start hitting the fan about the debt ceiling? You've brought up some fabulous points. We've got the break coming up. I'll deal, if you don't mind, can you hold on? Love to. Thanks.
Then we'll deal with it when you get back. We'll be right back, folks. Dow's now down 63, S&P's down. Basil Chapman, Tiger Technicians Hour. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Now the Dow's down 100. This is interesting, and the VIX is at 14.15, going to test that 9-period moving average. So, Dan, so this is what I'm looking at, and this is what I was talking about a moment ago, that if the selling persists, and now you've got the S&P down 9, for whatever reason it is, what we want is to see the result of the conclusion by the people who trade volatility that this is a lot more serious and that they now want the protection that they always like to get when they perceive that the market sell-off is going to have some legs, at least a duration, or points. It might just be very quick, but it might be sustained. So the answer to your question is, it really depends on where the VIX is Friday at 4 o'clock to start kicking in with that cup formation in the weekly chart. My suspicion was that from you were talking about the TVIX, that from the 1.6 level, that there would not be all that much more to go to the downside, and that there was a really good chance that they were going to announce some kind of a 10-for-1 split, whatever it is, because it's so low, and all the different tools that they have, especially the ones that are the inverse, that have sunk to very, very low levels, start announcing another 10-for-1 split. That's just my guess. And we'll see when that comes about. But do you have any position on the VIX at all right now?
No, nothing. I don't have anything right now.
Okay. So now here's the TVIX. It hasn't even broken above yesterday's high, and it's already, the Dow's at 17,903. The S&P's at 2,082. I don't want to go into this and if that. I want to give you very specific things. Okay, this is the way I would handle this. If TVX is what you use, and this is the inverse of the VIX index, it trades in direction with the VIX index. If you're prepared, see, 1.61 was the low yesterday. It's at 1.68. That sounds like nothing, but in fact, 7 cents is actually quite big in percentage terms. But I'm going to make the suggestion. It's just something that you can think about. I wouldn't dive into it, and I certainly wouldn't get carried away. But it might be worthwhile realizing that within, I'd love to say 10 cents, between 10 cents and 12 cents, that's about 8 or 9%. The TVIX is very close to giving some kind of a signal that says, if nothing else, it should get you back to the twos fairly quickly within a week or two. I think in terms of odds, that's a pretty decent odds to, that's the way I prefer to look at it. So I'm going to suggest that if you want to take just a small position in the VIX, at least you're there. At least you can get a feel for things, and you don't want to say, oh, now it's at 1.97 or whatever it is, and I've missed the move because it can go all the way back 30 cents, which then becomes a 20% decline. So nibbling here, I think is not a bad idea, and you treat it as two things. You can treat it as a little bit of insurance if you've got a portfolio at all that you not necessarily want to protect, but at least you want to ameliorate some of the downside move if it's mostly a long portfolio. But the other is treating it, and that would be part of insurance. So it's part A and part B. But the second thing, purely speculatively, if you're prepared to take a small position and say, I'm prepared to hold this. Now, holding a declining instrument is really never a good thing. But at this particular level, the way I've looked at the IYT, the way I've looked at the IBB, we're going to come back to that in a while, the way I've looked at so many of these different indices suggesting that we are getting close to at least a rotational correction with some of the best, the leaders starting to pull back, which puts a lot of pressure on the newcomers that want to be leaders. I think this is not a bad idea, just to start a position. And I would add to the position if the Dow closes under 17,820 in the next 2 days. And that's the way I would do it.
I had a limit order in this morning at 160, which obviously is not filled. But you think I should move that up to maybe 165?
Yes, I'm beginning to think, but now the Dow is down 135. Something's going on. So I'm going to suggest the other way, that I would just nibble on it right now and then put your order of 165. That's really your order. But I would just tiptoe in at 170 to at least have something there so that you know you're participating, at least psychologically.
Right.
You know what I mean? And then I'd leave the order of 165. But I wouldn't make it, I still don't want to make it a big order yet. But I would definitely consider it as something that I want to be starting the position in. Hope that helps you.
And you know what? Maybe if you'd like to comment, later even, is on the debt ceiling. I mean, last time it got hit, that was a real going down into it. It was a real upset, and then the market just kind of bounced off of it.
I was going to bring that up actually late. I was going to make it like Technical Friday. I wanted to bring in all those other socioeconomic and things. But you know what? The debt ceiling, I'm just going to say it right now. I haven't got the chart in front of me. I could probably pick it up maybe in the next break. But that is going to be something that comes home at some point, and we have to consider it seriously. Yes.
All right.
But and it's the relationship. Larry Pesavento showed us a chart months ago of this, and it was showing how deeply in debt that debt ceiling. When we look at the debt in relation to the market moving higher, you're getting that correlation of an expansion that's going to the extremes on both sides. And that is something to keep in mind. Yes.
All right. Thank you, Basil.
Thank you so much for calling, Dan. Always appreciate it. Dan Baskinridge, New Jersey. Now, let's do a couple of things here. I had a couple of questions. The first one came in from Freeman and wanted to know about the PHM. PHM is Pulte Homes. Whoops. That's a problem. That's a problem. Let me just see. I'm actually in the middle of the show, and I will call you right back. How's that? Okay. So the sorry, something's going on, a little family thing that I had to organize here. Sorry about that. PHM is Pulte Homes, and Pulte Homes is right now at 21.64, down 30 cents. I had all these notated, but I'm just going to do this real quickly. Here's the weekly. I want you to do the weekly to show you something very interesting. Look, there's an A. There's a B. What do we look for in the Chapman Wave methodology? The D. D is where you want to say, hey, I'm going to be a little bit careful here because at D, other things can happen. So here we are. We're at D, and the high was in the a peak D in the daily back at 23.36, and then 23.35 the next day, 23rd and 24th, 24th and 5th of February. That's what I call the Chapman Wave 2-bar reversal, came tumbling down to the most recent low of 20.59. Had a very nice pullback. Now, one of the things I wanted to mention to Freeman is that you'll see that just recently, Pulte was trying to move with the market. And yesterday, it moved even higher and still held very well at the close. Now it's giving it back because of the intensity of the selling. Dow's down 161, S&P's down 15. Now, this is very interesting. Why? Because we've got a peak D with a silent doji in the weekly chart. Monthly has made a kind of a double top. I'm watching this real closely because it participated nicely yesterday. The technicals are not great, but they're improving. So if you are short, which I think you are, then all I'm going to say to you is I'd watch the high of the day. If we take out 22.13, there's a good chance it's going to try to make a C and a D, or at least a C, in the daily chart. And that's all I wanted to say. That doesn't mean to say it couldn't come down later. I'm just saying in terms of risk reward, however, you're in the perfect position. Congratulations. And the 120-minute chart I haven't looked at, it's gone to peak A, B, C, D, E. So, and it's gone under the 200-period moving average. So on a very short-term basis, resistance should be between, it's at 21.66, down 29 cents. PHM, Pulte Group, Inc., Home Builder, and 21.82 is the 9-period moving average. It starts to close above there. That will suggest that the market is actually starting to bounce a little bit. I'd be watching it, but I think you're okay for now. And I'll tell you something. In the next 3 days, if Pulte takes out the low of 21.35, the low of yesterday, no. If Pulte takes out 21, that says that H pattern is going to be the pattern to monitor, and that the weekly chart will start to deteriorate as well. So that's what I'm watching. If it was earlier in the day at the very beginning, I would have said, hey, be real careful. You want to see this get to the 9-period moving average of 21.56. We've already gotten real close to that. So congratulations there. Next question was, I saw it. Oh, the next question was, next question is, Chris asked, I grabbed some TVIX early this AM. I don't usually trade it, but chart was screaming a buy. How long should I hold it max? That is it like leverage funds that decay or more like straight stock? Foreseeable target to take profits? Would love to swing it rather than trade. Now, that's a really good question. Two things. It's a terribly deteriorating instrument. We play it in the my opening call, but we treat it just as a short-term play. I'm not sure that how it's going to act. We haven't had it for a long term. We did much earlier back in October. It was trading much higher. But if you want to talk about a shrinking commodity, look at the monthly. Once upon a time, it was at 10,917. I hope the people there are listening who make these things up. 10,017, and the market has not gone up 10,000% or whatever 100,000% So yes, it's a shrinking commodity or instrument. Let's put it that way. So what we're looking at here is that the weekly chart is just for the first time showing a little bit of a sign in the MACD being very positive, but the stochastic flattening out. That's at least a sign of something, but not until the VIX. There it goes, 172. So the TVIX has the potential to go to the 181 level. I would suggest that if you're holding it, put a trading stop on half at about 165. That's above what you must have got. 165. What you got early today? The low was 163. Yeah, at about. No, I put a stop of 167 on at least a third of your position. And then what I would do, if you're not taken out and it keeps going higher, and the TVIX can get to, wow, if it can get to the high of 174, break above 174, the high of the 20th, then that 1/3 position that I just said you would take off if it was hit, raise the stop on that at 175. I'd raise the stop to 17. If it gets to 175, it can do this so quickly. It's just a pity about that. I'd raise the stop to 170 on a 1/3 position. At least try to lock in profits on this, and then use the other as like a trading stop. And I'll deal with it tomorrow. Gosh, I almost put it in the paper this morning to just nibble on this, but I said no. We've got a particular position that for us is up already over 15%. I believe it's almost 15% in 2 days. We can't complain on the short side. So okay, now the other thing is I had a question that then would I look at the IBB? Well, the IBB, this is what I did for my subscribers. I did a very big report on it this morning, kind of big for me, it was just kind of big, on why I thought that was a very significant high made on Friday. And one of the things that I looked at, I wonder if I've still got it right here. Yes. One of the things I looked at was that high of 374.99 that was in the price of the daily was actually 375 open, round number, 375 high, round number, and the close of this bar was 367. That said to me, unless the IBB can close above 367 in the next 2-3 days, there's a real good chance that you'll get at least a 1-to-1 to the downside. And so far, that's kind of working out. That's number one. Number two is, here is the chart. And there it is. See that little, wrong one. Uh-oh, do I still have it? Yes, I do. So here it is. The IBB made a 375 right there. 375, round number, open, high, and close. It was printed. And that's all we needed to see. To me, it's one of the techniques I've developed over the many years. And the question then is, what is the monthly? I don't care what the monthly is right now. I've got it as the G/C. I'm going one. When you get a potential for a hat trick top, what you got to do is say the monthly is very close to some kind of a pullback. But we don't know yet whether it is. I prefer if it was a D or an F, or even an E. But the weekly has made a peak D. There's no question it's not going to make 375.1 by Friday. There's just no way on earth. So this says that there's a good chance you finally get your peak D in the weekly. There's a Roman candle that is my target on the downside at some point. I'll be back in a few minutes. Hold on for this break, and we'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Yes, I'm trying to show you. This is a technique, the plumb line technique that I use. And it says right here, look, right there, from this particular gap to the high of the IBB in the 120-minute chart, what happened was you went up in a certain number of bars, but this plumb line says you have come down and broken in a shorter number of bars the support level. That means it can take you to the very next level. I'm using a triangle pattern right here because there's no arch. It just went straight up and straight down. To say that in this particular instance, and this is a 120-minute chart, what you have is that there's a chance now. The 120-minute chart is at the stochastics at 2%. It's just ready for a bit of a bounce, and that bounce says that it could go bounce to 350. It's a 346.11, 350. I don't know if it can get there, but let's say it was 347. So it can bounce about 2 points. but then it should make the arch formation and try to get back and back to where it was back at 1:30 on the 13th of March at the low of 342.27. If in fact it bounces even higher and breaks the resistance level, then you're looking at the low right there of 352.36 as an upside target. So this is a very important moment. And if you had to look at the inverted thing, I drew this in for subscribers last night. And I said, this is my target right there, the left side, right side. And you can see it broke that target. This is the exact opposite of what I was just showing you. Left side, right side, price time match. And it broke it. It went right through that. This is still leg B. And it's suggesting that there should be a C and a D to the inverted, the ProShares, ProShares Ultra Short NASDAQ Biotech. And that's very interesting. Why? Because within the context of what we're looking at, I'm not getting that. Let me just, why are the charts not coming in nice and clear? I don't know. I'm getting used to a new keypad. There it is. So I drew it into the 120-minute chart, and I've drawn it into the daily chart. So this is going to be very interesting. Why? Because if the selling, and I don't see any headlines or anything. This quiet selling is exactly what happens when it's exactly what happens when least expected. That's really what I wanted to say. So here we are. There's a left side, right side price time match, and that doji candle with 35.17 would be the upside level that we'd be looking for by the 27th of March at 4 o'clock in the afternoon, and we're almost there. And today's the whatever it is, the 25th. So I'm taking it very seriously that there's a sell-off that's occurring, that the VIX index, VIX.X, has in fact come alive. Look at that in the 120-minute chart, and it says that at 1468, if there's a move towards 1495 to 1505, then that 200-period moving average suddenly becomes a focus. And that's the reason why we've got such a crazy portfolio for my subscribers. We have some gold stocks, seems to be working. We have the bank is not working very well. Tiny position in the bank stocks, more as an experiment to see if we can survive any pullbacks. I don't know if I'm going to mess around at all with that. And a home builder that's still up from where we bought it. And let's see what else. There was something else we had. And then in a drug-related area, drug stores, that is. And that seems to be, I don't even want to talk about the end of the day, anything can happen. But it doesn't matter. You stay tuned, because Larry Pesavento is going to give you some fabulous information. You made a wonderful call on gold recently. I'd love to hear what Larry's going to say. Have a great day, and I'll see you back here tomorrow, same time, same station. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.